Want to know the secret of building wealth? The answer is pretty simple. Invest in assets that generate income. Yup, the whole idea is to put your money to work for you so it can earn you more money. This is really important because there is only so much time you can exchange for income as your time is limited. Welcome, money finders, enriching the lives of people we touch. Top 10 amazing assets that make money 2021. When thinking of the best ways to establish a financial cushion and overcome reliance on any one income stream, it is advantageous to diversify your income sources. This means having several streams of income coming from different investments or assets that make money. Avoiding reliance on any single financial resource can benefit you over the long term by providing benefits through diversification. In fact, many successful people choose to do this by utilizing income-generating assets or assets which generate cash flow. Let's discuss what these assets are and then do a review of some of the smartest income assets available to you. What are assets that generate income? The definition of an income-producing asset is an investment which generates consistent, recurring revenue, cash flow, or income over time. Assets that generate income require various amounts to get started. Some are investments which require little to no money to begin, while others require significant amounts of capital to grow and maintain the investment over time. Furthermore, cash flow assets are not only a resource for experienced investors, but also for anyone who wishes to make money while you sleep. With proper research, planning, and some initial money, anyone can diversify their income streams through investing in passive income activities. Now, let's review some of the best income-generating assets. Subscribe to our channel if you want to know all about financial freedom. Like to support our channel. Number 10. Certificate of Deposit, CD. Certificate of Deposits, CDs, are likely the safest way to grow your investment, although it's also the least lucrative. With a CD, you give your investment to a bank who guarantees a rate of return. Because of the low current interest rate environment, right now CDs are not paying much in terms of interest. But when compared to a savings account, it can be more attractive, especially if you are sure you won't need the money in the short term. CD investing pros: more earnings than a savings account, secure and reliable. CD investing cons: lower returns. You have to keep your money invested for a set amount of time. The longer you lock up your money, the greater your return. Number 9. Small businesses or franchise or angel investing. If farmland isn't for you, maybe you should consider owning a small business or part of a small business. This is where angel investing and small business investing come in. However, before you embark on this journey, you have to decide whether you will operate the business or just provide investment capital and expertise. Owner plus operator. If you want to be an owner plus operator of a small business or franchise, just remember that as much work as you think it will likely take more. As Brent Beshaw, an expert on small business investing, once tweeted, "Here is what it takes to run a Subway restaurant." Links to 800-page operator's manual. Now, imagine trying to run a $50 million manufacturer. I don't mention Brent's comments to discourage you from starting a small business, only to provide a realistic expectation for how much work they require. Owning and operating a small business can generate much higher returns than many of the other income-producing assets on this list, but you have to work for them. Owner only. Assuming you don't want to go down the operator route, being an angel investor or passive owner of a small business can earn you very outsized returns. The internal rate of return on angel investments is in the 20% to 25% range. However, these returns aren't without a very large skew. An Angel Capital Association study found that just 1 in 9 angel investments, 11%, yielded a positive return. This goes to show that though some small businesses may become the next Apple, most never make it far past the garage. As Sam Altman, famed investor and president of Y Combinator, once wrote, It's common to make more money from your single best angel investment than all the rest put together. The consequence of this is that the real risk is missing out on that outstanding investment and not failing to get your money back, or, as some people ask for, a guaranteed 2 times on all of your other companies. This is why small business investing can be so tough, yet also so rewarding. However, before you decide to go all in, you should know that small business investing can be a huge time commitment. This is why Tucker Marx gave up on small investing and why he thinks most people shouldn't even start. Marx's argument is quite clear. If you want to access to the best angel investments, i.e. big, outsized returns, then you have to be deeply embedded in that community. Therefore, you can't do angel or small business investing as a side thing and expect big results. While firms like microventures allow retail investors to invest in small businesses with other opportunities for accredited investors, it is highly unlikely microventures is going to have early access to the next big thing. I don't say this to discourage you, but to reiterate that the most successful small business investors commit more than just capital to this pursuit. So, if you want to be a small business investor, keep in mind that a larger lifestyle change may be warranted in order to see significant results. Average compounded annual return 20% to 25%, but expect lots of losers. Pros: can have extremely outsized returns. The more involved you are, the more future opportunities you will see. Cons: huge time commitment. Lots of failures can be discouraging. Number 8. Recession-proof brick and mortar businesses. Business, similar to life, usually works in seasons. Many businesses have peak seasons and slow seasons where they focus much of their time preparing for the next uptick in business. However, not all businesses are like this. Some businesses are recession-proof. Despite what is happening in the economy, these businesses will have consistent if not increasing demand. These businesses include those in the healthcare space such as nursing homes or agencies, laundromats, auto repair, and grocery stores. Regardless of the economy, people always need access to health and food. Basically, these businesses are essential. Investing in an essential service business can prove to be a consistent source of income during any economic period. Number 7. Municipal bond funds. Municipal bond funds invest in a number of different municipal bonds or munis issued by state and local governments. And interest is generally free of federal income taxes and may also be exempt from state and local taxes too, making them particularly attractive in high-tax states. Muni bonds may be bought individually through a mutual fund or an exchange-traded fund. You can consult with a financial advisor to find the right investment type for you, but you may want to stick with those in your state or locality for additional tax advantages. Municipal bond funds are great for beginning investors because they offer diversified exposure without the investor having to analyze individual bonds. They are also good for investors looking for cash flow. Best investment for municipal bonds are a good selection for investors who live in high-tax states, allowing them to avoid levies and generate income. Their lower yields may make them less attractive to investors in low-tax brackets or low-tax states. Risk. Individual bonds carry default risk, meaning the issuer becomes unable to make further income or principal payments. Cities and states don't go bankrupt often, but it can happen, and historically, muni bonds have been very safe, although a rough 2020 challenged that safety a bit. Bonds may also be callable, meaning the issuer returns principal and retires the bond before the bond's maturity date. This results in a loss of future interest payments to the investor. A bond fund allows you to spread out potential default and prepayment risk by allowing a large number of bonds, thus cushioning the blow of negative surprises from a small part of the portfolio. Liquidity. You can buy or sell your fund shares every business day. In addition, you can typically reinvest income dividends or make additional investments at any time. Number 6. Royalties. When people think of royalties, music is the first to come to mind, but royalties can apply to other creative products such as art, natural resources, and more as well. You don't have to be the musician or artist who created a song or piece to profit from it. In the world of art, you can invest in royalties and receive payment every time your product is used. An easy way to get started is to check out Royalty Exchange. This website allows you to buy music royalties from musicians. And if you are looking to invest in art for capital appreciation instead of just assets generating income for your financial needs, consider investing in art with Masterworks. The platform allows you to invest in blue chip art and profiting when the company sells this art for a higher value than it was acquired. Number 5. Peer-to-peer or P2P loans. P2P lending is a way to earn higher returns on your investments by making loans directly to consumers. P2P lenders make personal loans available to consumers for various purposes, and monthly payments are collected and paid to the investors in those loans. As an investor, you don't typically purchase an entire loan. Instead, you will purchase slices of loans referred to as notes. These notes can be purchased for as little as $25. That means you can spread an investment of $5,000 across 200 different notes. Because you are acting as a direct lender to consumers, the interest rate returns on your investments are much higher than you get through more conventional investments. Number 4. Cryptocurrency. Cryptocurrency is a kind of digital electronic-only currency that is intended to act as a medium of exchange. It's become popular in the last decade, with Bitcoin becoming the leading digital currency. Crypto has become a hot property in the last few years in particular, as dollars have flown into the asset, pushing up prices and drawing even more traders to the action. Bitcoin is the most widely available cryptocurrency, and its price fluctuates a lot, attracting many traders. For example, from a price below $10,000 a coin at the start of 2020, Bitcoin soared to around $30,000 at the start of 2021. Then it doubled from there soon after. Unlike other assets listed here, it's not backed by the FDIC or the money-generating power of either a government or company. Its worth is determined solely by what traders will pay for it. Best investment for. Cryptocurrency is good for risk-seeking investors who wouldn't mind if their investment goes to zero in exchange for the potential of much higher returns. It's not a good choice for risk-averse investors or those who need any kind of safe investment. Risk. Cryptocurrency has very significant risks, including one that could turn any individual currency into a complete zero, such as being outlawed. Digital currencies are highly volatile and may fall or rise precipitously even over very short time frames, and the price depends entirely on what traders will pay. Traders also run some risk of being hacked, given some high-profile thefts in the past. Liquidity. Cryptocurrencies are generally liquid, especially the major ones such as Bitcoin and Ethereum, and you can buy and sell them at any time of day. However, the commissions on them tend to be very high relative to typical investments such as stocks, and you will need to see significant appreciation simply to break even. So, it's important to find the best broker to minimize these costs. Number 3. Land rentals. You don't need to rent out buildings. Another option is to rent out land. Depending on the size, location, and characteristics of your land, there are various options for how you can rent it. If you have fertile soil and an expansive enough plot of land, you can rent it to farmers. You can do this privately or through a matching service such as shared earth. If you don't have enough land for a farm, you can rent it to someone who wants a garden. Number 2. High-yield savings account. Just like a savings account earning pennies at your brick and mortar bank, high-yield online savings accounts are accessible vehicles for your cash. With fewer overhead costs, you can typically earn much higher interest rates at online banks. Plus, you can typically access the money by quickly transferring it to your primary bank or maybe even via an ATM. A savings account is a good vehicle for those who need to access cash in the near future. Best investment for. A high-yield savings account works well for risk-averse investors and especially for those who need money in the short term and want to avoid the risk that they won't get their money back. Risk. The banks that offer these accounts are FDIC insured, so you don't have to worry about losing your deposit. While high-yield savings accounts are considered safe investments, like CDs, you do run the risk of earning less upon reinvestment due to inflation. Liquidity. Savings accounts are about as liquid as your money gets. You can add or remove the funds at any time, though your bank may legally limit you to as few as 6 withdrawals per statement period if it decides to do so. Number 1. Rental housing. Rental housing can be a great investment if you have the willingness to manage your own properties. And with mortgage rates hitting all-time lows recently, it could be a great time to finance the purchase of a new property, though the unstable economy may make it harder to actually run it, since tenants may be more likely to default due to unemployment. To pursue this route, you'll have to select the right property, finance it or buy it outright, maintain it and deal with tenants. You can do very well if you make smart purchases. However, you won't enjoy the ease of buying and selling your assets in the stock market with a click or a tap on your internet-enabled device. Worse, you might have to endure the occasional 3 a.m. call about a broken pipe. But if you hold your assets over time, gradually pay down debt and grow your rents, you will likely have a powerful cash flow when it comes time to retire. Best investment for rental housing is a good investment for long-term investors who want to manage their own properties and generate regular cash flow. Risk. As with any asset, you can overpay for housing, as investors in the mid-2000s found out. With low interest rates and a tight housing supply, housing prices ran up in 2020 despite the struggles facing the economy as a whole. Also, the lack of liquidity might be a problem if you ever needed to access cash quickly. Liquidity. Housing is among the least liquid investments around, so if you need cash in a hurry, investing in rental properties may not be for you, though a cash-out refinance is possible. And if you sell, a broker may take as much as 6% off the top of the sales price as a commission. Reviewing the top income-producing assets. Wherever you are on your path to financial freedom, implementing a few of the above ideas can help. By setting up a portfolio of income-producing assets, you can improve your financial health. And if you found this video useful, maybe others you know will too. So, please feel free to share this with friends or family. I hope you guys have enjoyed this video. If you did, give it thumbs up for the YouTube algorithm. And if you're new around here, then subscribe and turn on your notifications. We are trying our best to make videos for you and hopefully help you achieve your financial goals. Thanks for watching and until next time, goodbye.